The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the June 9th magnificent Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs, what I call the 9 rules of the universe. You know, the universe says to each of us on a continuous and ongoing basis the following 9 things. It says, hey, if you don't move, I won't move. Or said another way, if you sow, you can reap, but first you've got to sow. Number 2, it says, hey, unless you change what you are, you will always have what you've got. Think about that one when you're trying to overcome some hurdle, because that's what the universe is telling us. Number 3, it says, hey, the way you do anything is the way you do everything. Number 4, it says, leaders are readers out there. Remember, it's not what the book costs, it's what it will cost if you don't read it. Number 5, don't say, if I could, I would. Say, if I can, I will. That's called conviction, folks. Number 6, wherever you are, be there. If you're at work, be at work. If you're at home, be at home. Folks, wherever you are, just be there. Live in the present. That's a beautiful thing. Number 7, don't set your goals low. Because if you don't need much, you won't become much. Yes, teach that to everybody that you can come in contact with. Number 8, happiness. Happiness is not something you postpone for the future. A lot of people postpone happiness. That means you got to live in misery. Folks, happiness is something you design for the present. And finally, number 9, time is our most valuable asset. Yet, many of us tend to waste it, kill it, and spend it rather than invest it. Not you. You're investing your time with us here at TFNN. We respect that. Respect the rules of the universe, and they will respect you. It is Magnificent Monday. This is Tiger Financial News Network. I'm Steve Rhodes, and let's go kick off these markets out here. Right now, it is really a relatively flattish type session. The Dow is up 16 points. No big deal out there. It's trading out at 16,940. S&P up 2 points. It's trading out at 1951. NASDAQ is up 9 points, trading at 4330. Russell 2000 is leading the charge the upside, so we'll take a look at the Russell. We'll take a look at the IWM. NASDAQ off 80 cents. That NASDAQ 100, I should say, off at 80 cents right now. Gold is up $1.60. Silver's up 9 pennies. Light sweet crude on the move this morning, up $1.21. It's trading out at 103.86. Moving in the markets out here, you've got Intercept Pharmaceuticals. ICPT is a ticker symbol. That's up $20. Hittite Microwave, that's up 17. Identix Pharmaceuticals, that's up 17. Family Dollar Store up $9. XBI, the Spiders Biotech, that's up $8.88 out here. That's up 6%. You got Pharmacyclics up $9. Regenerant Pharmaceuticals up $8. Man, a lot of pharma. We've got Priceline up $3.65. Google's up 4 to the downside out here. Let me get point losers. I don't want the percentage losers. Point losers. There, I got to switch tabs on my chart out here. Wynn Resorts off $7. We'll take a look at that. Green Mountain Coffee Roasters down 7. Netflix off 5. Maximus down to $3.50. Gilead Sciences off $2.80. Emerge Energy EMES off $2. New Star off $2. Pilgrim's Pride down $1.55 out here. Our call number is 877-927-6648. Give us a call, folks. Happy to take a look at your stock chart. Help you out in any way that I can. Let's start off by taking a look at the NASDAQ, see what's going on out here. Let's take a look at the NASDAQ. Let's look at the 4-hour chart. Let's take a look at a 240-minute chart out here. There's the NASDAQ. That led the markets down. It certainly has led the markets up. Of course, we got the Russell 2000 kicking into full swing out here. On a 240-minute chart out here, things will get pretty bullish if you can get above 37.91.15 or so. That's the level that's acted as support since about 10 o'clock last evening out there. That is the resistance line. That is what it's trying to get above out there. If we take a look at the daily time frame, does that mean that it's bearish? No, it doesn't mean that it's bearish. It means that is the hurdle that it is trying to overcome. And if it gets above that, that turns to be bullish. At this stage here, if you were trading a 4-hour chart out there, 240-minute chart time frame out there, then you'd have to say what you would be is maybe more neutral. Maybe more neutral. You'd be looking at support being 37.68. On the daily chart out here, no reason at all to be bearish. You're up above. It's unfair high, its resistance level, and that's all the way back at 36.45. You're at 37.85. That's 140 points northward. No reversal signals or anything along those lines here as we speak. Just simply a market that is overbought. If you take a look at the bottom area of my chart out here, the very bottom line, that little blue line out there, that's your relative strength indicator line. Right now it's priced out at 73.09. Anything above 70 gets into a condition that is overbought. Can it stay overbought for a while? Yeah, most certainly it can. However, even though it can do that, usually what happens is it starts to either pull back or move sideways in order to work off its condition. But that's what's going on inside, what is in essence struggling here inside the market. If we take a look at the Dow futures, let's go take a look at the Dow futures. Let's look at those same two time frames out here. Right now the Dow is up 17 points. If we take a look at the futures, they're trading out at, why didn't it grab the Russell? Let's take a look at the Dow. I got to hit the right button, and then that makes things a whole lot easier. Now, the 240-minute time frame, the Dow futures up above its resistance level on that 240-minute time frame, which is at 16,846. You're trading at 16,862. So on the 4-hour chart, it's giving you a bullish signal for sure. That is on that time frame. On the daily time frame, it is also in the bullish camp out here. Bullish camp gives you support levels down at the 16,544 range, so it most certainly is up above support. It's got an 8. It's got a couple A to B equals CD patterns that are out here. The smaller one is the one that takes you back to the time frame of April 14th. That low out there was, let me see here. Should have been my A point. That's out at 15,809 out there. Your B point came in here at 16,622. That was on May 13th. Retraces down into the May 20th time frame to 16,238. 1-to-1 A to B equals CD. Inside the Dow futures gets you up to the 17,051 at this stage. And take a look at the daily. There's nothing here to indicate that is not what it wants to do. We can see so far today somewhat of a doji-style candle session that is using the futures contract. At 2 is in the overbought status out there. Let's go take a look at, let's do this. Let's go take a look at the ETF structures out here. In fact, we'll take a look at the ETF structures maybe across the board. Give me a moment here to switch over. Let's go take a look at the IWM. Now, if you're watching this on Tiger TV, what I've got here is 3 different time frames for you to look at. The time frame in the left, that'll pop up and populate on my screen. That's the 4-hour chart, 240-minute chart. The IWM says resistance was at 116.24. 116.24. Prices right now 116.63. Prices above that area. That says you're long and strong inside the IWM as we speak right now. The daily chart here, I've got A to B equals CD pattern out here that has formed. I've got some retracements as well. Got a little bit of everything out there. Let's take a look at the A to B equals CD pattern. That A point coming off of the hammer candle. That's on the trading session of May 15th. That low, by the way, is at 107.44. That is the IWM. If you take a look at the trading session that took place on May 27th, that becomes your B point. That's out at 113.84 out there. The retracement was a 0.382 retracement. That was into June 3rd out here. That's down at a price point. It got down to 111.11. All ones out there. Not bad. The 0.382 retracement was 111.40, so you got to love that. You're up above that area. It's taken off. It's taken off with some conviction, real conviction behind the move on the trading session of June 5th. Volume-wise, not so much on Friday, but Friday's volume wasn't too shabby. 1-to-1 A to B equals CD says 117.51 is the mark. Now, of course, the IWM which had gotten hit the hardest and gotten into the most oversold condition. Obviously, it has worked its way off there. It is not in an overbought status as we speak right now. Using the relative strength indicator, the 70 line as our mark out there, it's only at 65, 68, so it's got some room to play a little catch-up and move higher. 117.51 is its next target area, or 116.55, but really what the pattern here is communicating to us until we get any type of other information, is more likely 119.25 is where it wants to run to. That is on the daily chart. That is the Russell 2000. It is moving and grooving. And in fact, if you take a look at the weekly chart, what it did last week is it got above its resistance level, its unfair high, and that was at 114.07. So what it really does say is the area of the highs is what it wants to do. It's trading inside the swing point now. That swing point on the weekly chart, that is the March 3rd level, says that it wants to go test that high out there, and that's at a price level of 120.58. That is on the IWM. Let's go take a look at the SPY. Let's go see what the SPY is doing. We'll take a look at those three different time frames as well for you. As we take a look at the SPY on the 240-minute time frame, up above resistance, 194.75. Look, if price gets below that area, 194.75 out there, probably says price pulls back. We see some type of retracement. 193.87 ought to be the area where you would find some support inside of the SPY. Short of doing that, it wants to run higher. How much higher? Well, if we take a look at the daily chart inside the SPY, a couple of A to B equals CD patterns that we have out here. The shorter one, the smaller one, it's already to the 1 to 1.618, A to B equals CD. The larger one, the 1 to 1.618, is a bit higher. That's at 196.42. Price is what? Extremely overbought out here. So it says at some point in time in the near future, we're going to see a market that's going to work that condition off, either by moving sideways or by retracing. I don't know which one, but it will likely do one or the other. What's the likely target right now? I'd have to say it's the 196.42. You're 195.56 as we speak right now on the daily chart. Real support at 192.99. It gets below that, that starts to get a little bit complicated, and says 190.51 would be an area for you to be paying attention to. And on the weekly chart, well above the resistance level. It began doing that on April 28th, and that's at 187.49. Weekly chart says that should be pretty decent support. If that area fails, you're looking at 182.90. Now, I'm giving you those numbers. I don't have any indication out here that says that this is going to fail at all. And any retracements, you're going to have to start taking a look at the retracements that are fairly narrow. I mean, the first place, normally I don't tell people to look at the 0.382 area, but if it's pulling back into that area on light volume, that may in fact be a spot where you want to take a look at taking a long position or adding to a long position inside the market. So this is going to be a nice, long summer rally. Even if the market moves sideways or pulls back a bit out here, this summer rally is going for a while. We're not talking, this is what is today, June 9th? We're not talking June 10th. We're not talking July 10th. We might be talking July 10th, 11th, 12th, 13th, 14th, somewhere like right around there. Oh, maybe we're talking August. 877-927-6648. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow is up 16. S&P is up a buck. Composite up 8. Russell 2000 up about 8 points as well. Let's go back and finish off the ETS. We took a look at the IWM, the SPYs. Let's go take a look at the Qs. We'll finish off. We'll take a look at the Qs and the diamonds. I don't think we touched on that. So inside the Qs, just so we were looking at the NQ out there, we were taking a look at its 240-minute, its 4-hour time frame. We were seeing that it was running into resistance. Same real setup here inside the Qs. The numbers here in the Qs, 92.89. A close above that, very bullish. A close below that, or where we're at right now, is just more neutral. Says any type of retracement ought to find support at about $91.80. 91.93 would be the number out there. That's on a shorter term time frame. The daily time frame says support at 91.45. The weekly's got support at 90.55. Those would be all your support areas. Any move down into that range may be a nice little gift out there as far as taking a look at getting long. Any close below 90.55, that's got to get you back more towards a neutral stance inside of the markets, waiting for some other type of reversal signal. Inside the Dow, diamonds out here, they're up 19 cents right now. They're trading out at 169.27. On the 240-minute chart out here, it's well up above its resistance level. That's all the way down to 167.40. Old resistance should be what? New support out here. So 167.40 on the diamonds, 167.12 is on the daily chart, and 165 is 165.51 becomes your support on the weekly chart. To pull back to there would be nice because that would actually be testing, in essence, the unfair lows or the bottoms of the support levels inside the daily chart for the diamonds. Don't have any indication that that's what it wants to do, but those would be the numbers that we would be looking at for sure. Inside of the S&P 500 sectors, we've got the health sector here struggling the most this morning. It's down 23 cents out there. So let's go see what's going on, what kind of message inside the healthcare sector. XLV is the ticker symbol. Let's go ahead and take a look at the 4-hour chart. Let's look at 240 minutes, and 60.44 was the unfair high. You're trading at 59.92. You're trading just below that. That's occurred here during the last 4-hour session out here. Ought to find support at about 59.66. Right now it's traded down to its point of control, its largest congestion area, and that's acted as support, 59.83. So if it were to close below 59.83, you're looking at 59.66. out there. That's on a shorter term time frame chart. Daily chart shows resistance as well at $60.19. The intra-session high so far, $60.19. You got to like how that works. So that is on the daily chart. This brand new market profile that has come out, 59.42, being a potential level of support on the daily chart for the healthcare sector, for the XLV. And the weekly chart still in very bullish mode out here, being above 58.96. Let me see. Any other sectors here that are struggling? The XLP, only off 6 pennies out there. That's your consumer staples sector. So not a big deal out here. Let's go see if it's got some resistance that it is running into. The 240-minute chart looks pretty good. 45.04 is the number there for it to find some support. The 240-minute chart is just giving you a little key reversal session, though. That is where the high and low of the prior bar is exceeded, and you need a close in the opposite direction. Well, this does not end until 12 noon on this session, so we can't confirm it's a key reversal session out there. And if it were, that would say you've got some pretty good resistance up at the top or the high, which thus far is 45.27 out here. That's the only bearish-oriented looking signal that I can see out here as we speak, and I take a look at the sectors. Number one weighting structure inside the S&P, representing what, like 17, 18%? 19%, something along those lines out there. That's the technology sector. Technology sector running into a little bit of resistance at 38.26. Looks like the intra-session high so far is at a price level of, where did it go? 38.26. Well, you got to like that. Here's a chart expanded out. So that is above 38.26. That is nice and bullish. Does that mean you sell it down? No. It depends on what the time frame is that you're holding on to it. A retracement inside the technology sector would take price back to about the 37.85 level where it would be tested. If it could stay above that, that would then be a buy type area. The daily chart says 37.81. That's what's nice about 37.85 on a 240-minute chart. You'd have some nice synergy there for looking at a potential buy inside the technology sector, one of the double or triple ETFs that trades around that area. Right now, we've got the Dow up 19, S&P up 2. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Not a lot changed here in the markets. The Dow's up 17, S&P's up a couple. Russell 2000 again, really leading the charge here this morning, up by 0.7%. So there's where you've got the largest movement. Let me go check in on the New York Stock Exchange. Let's go see what that is doing out here. It's up 10 points. Net advancing issues 681. So not a huge market breadth day out here in the New York Stock Exchange. Nonetheless, it's still in a nice, big, strong, bullish mode out there. I don't recall the number of net decline issues that would be needed in order for the bears to take control, but it's in the 13, 14, 15, 1600 range out there. So that is not an issue as we speak right now. Let's take a look at some of these stocks here. We took a look at the sectors. We took a look at the ETFs. Let's go look at some of these stocks here that are moving now. You know, one of the ETFs I know that many of you Tigers follow is the IBB. That is the NASDAQ biotech sector out here. What is showing up on my screen this morning with the largest change dollar-wise to the upside is the S&P biotech sector, and that spider is XBI. X is in X-ray, B is in boy, I is in Idaho, potatoes out there. XBI gapping up this morning. Let's go take a look at it. See what kind of patterns that we can see out here. Now, gapping up this morning so far, volume 432,000 shares out here. That is no substantial A to B equals CD to the upside or anything. Let's take a look and see what it's trading into. Volume-wise, there was a little downdraft out here that took place on April the 4th, and that had volume of 2.2 million shares. We've been trading for an hour, and it's done 400,000 shares, so 4 times 6.5, 4 times 6, 2.4 million, versus the downdraft out here with 2.2 million. So, I don't know if volume will maintain or keep up at this pace out here. But what it's really also done, it's up above a consolidation pattern, right? You can see that this has been, in essence, consolidating sideways here, between the price level of somewhere around 135, and we'll call the bottom of the consolidation level down around the 119. So 119 to 135, 119, 129. All right, so you got 16 points. So 16 points added on top of the 135 level. You've got 151, right? You're trading at 146.65. So you'd have to say the 151 area is likely where this will head to. Now, a couple days ago, it got above its unfair high out here. Did that on the trading session of June 5th. That put it in on a daily chart, put it into a bullish mode out here. Let's look at a weekly time frame. Let's go see what it's doing on its weekly time frame. See where it is with regard to its market profile. We'll also take a look at retracements. Weekly time frame right now this week. Excuse me for that little chug of water out there. 144.74 is the resistance line. It closed this week above that, gets bullish, and that is inside the XBI. Let me see if I can, and again, used to this new tool out here. Come on, do that for me, would you? There we go. Let's take a look at retracements. Let's come off of the swing point high down to the low on that trading session of April 14th. The 0.382 retracement, it's up above that area. Oops, I didn't mean to do that. There we go. Escape from there. There we go. The 0.618 retracement area where it looks like this wants to head to on a weekly chart would take it up to 157.51. That ought to be its next move out there, and that is ticker symbol XBI. That is the S&P biotech sector. That is off to the races. I might as well just pull up IBB, just go see what that is doing, too. We'll take a look at that on its weekly chart, see how similar the patterns are. So a little bit different, right? Inside the IBB on its weekly basis, its resistance is, and its unfair high on the weekly basis, 264.29. You're at 248.81 right now. And if we take a look at, let's go take a look at retracements on this as well. So my retracement would be the swing point high from February 24th down to the low that was put in on the trading session of, the week ended April 14th. So it's trading right now at the 0.618 retracement level, 249.45, and you're trading at 248.80 right now. Nonetheless, on the weekly chart, that candle looks good. Of course, let's really look at the daily chart. We are just beginning the week out here. Let's see what it's doing on a, let me get rid of, maybe it maintain the retracements for me. Okay, cool. So there you can see the retracement level, the 0.618 area. If it can close above that, let's see if there's any resistance out here. You're trading inside that downdraft from March 21st. That has, you can see that's got quite a bit of volume to the downside. So 5.4, or is it 54? 221, 394, 5.4 million shares to the downside. Nowhere near that kind of volume. Last couple of days have been 674,000, 1 million shares, decent volume on June 5th. So far this morning, this morning's volume is not too bad, 449,000 shares. So it closed above 250, and this ought to run up to the area where the downdraft began, right around the 0.786 retracement level, right around 261. 260.87 happens to be the number out there, and that is on the IBB. Let's go take a look at Green Mountain Coffee. Let's take a look at Wynn Resorts first. Wynn Resorts here, it's trading down $7 and change, nearly 4% off of its close from Friday out here. Now, if you take a look at Wynn Resorts, this is where you got to put together a couple of systems out here. Let's go see what it's doing out here. Wynn Resorts, right now it's trading out of 197.26. You can see it's trading below its unfair low out here. That's at 201.17. That says you can look at short opportunities. That would be okay to look at short opportunities. Volume this morning, 1.1 million shares out there. Now, what it's going into You've got a swing point all the way back here. That swing point's got 3.7 million shares. If I squeeze this in just a bit, you can see it's a swing point that's got some volume out there, and the low has not been tested. So it would suggest that the low out there, which is 188.43, 188.43 ought to be tested. And maybe, in fact, it will. Now, what it's going to have to do on the daily chart, it's going to have to get through this hammer candle. Hammer candle right here in the trading session of May 15th. The low of that trading session is at 195.09. So it really needs to break that. We can see another consolidation out here that's setting up, and that's inside Wynn Resort. So that's what the daily chart, and that's what that daily candle is telling us. Again, the number there was 195.09. Let's go over and see what the weekly chart says. So remember 195.09. Let's go see if the weekly gives us any kind of support. Again, 195.09. What's on the weekly chart out here? It shows 194.27. Okay, so here on the weekly chart, so on the daily chart, it gave you a signal. Hey, maybe you can go ahead and take a look at this as a short. You want to short, expensive stocks out there. Then you've got room to really, just normal retracements can make you some nice bread out there. However, knowing that you got a hammer candle on a daily chart, it's been consolidating. To me, that would say I'd be weary of trying to take a look at this here because you haven't really broken through a swing point on the way down. You got bulls hanging out here, and your market profile on the weekly says 194.27. I would wait. I would wait to break that hammer low. I would wait to break the low of this, especially since you're so close right now. Wait to break the low of the unfair low or the support level on a weekly chart, and that is of Wynn Resorts. WYNN is the ticker symbol. That is my read as we speak right now. Let's take a look at Green Mountain Coffee Roasters. That's leading the charge on the way down here. Now, that has been on a tear to the upside, as I recall, the last several trading sessions or so. Green Mountain Coffee Roasters, now the Green Mountain Coffee Roasters on its weekly chart. So speaking of that support level, at unfair low support level out here inside of Green Mountain Coffee Roasters, that's the unfair high. That's where price came back and tested and rejected that area back in May of 2014, May 5th, the week of May 5th. Then it kind of took off again. It's a weekly chart that we're looking at out here. So today's candle session, again, it's a weekly chart, so we're going to go look at the daily chart and see what kind of information it shows. But this would show just a pause button. That's all that is. Not saying it's $114 is where it's trading at. But let's try to get the information out of the daily chart. So 89.43, quite a ways down. That's your level of old resistance, should be new support out there. Okay, Green Mountain Coffee Roasters. This says it's trading right now right at about the support level, 113.64. So if this were to close below 113.64, maybe you could entertain it, but volume-wise, what's it really doing? So this thing here had a nice breakaway session on May 13th. The volume there was 11 million shares to the upside. It's got a gap. See that gap? It's the top of this trading session right here from May 12th out here. So that's the gap. Today's candle so far, nothing really bearish about this candle. It's an inside trading session. It's tested support so far at 113.64. The low has been 112.53. No, I'm sorry. The low has been 113.51. 113.51. It's rejected that area so far. And if it's volume-wise on, Friday, this thing had another 5.6 million shares to the upside. The pullback this morning that's pretty decent volume. 2 million shares so far in trading. But this ought to find some support at this open gap out here, at this breakaway, because it's not coming back with volume in excess of, does not appear to be at this stage, in excess of 11 million shares out there. And that is on Green Mountain Coffee Roasters, GMCR. Is the ticker symbol. Let's go look at Netflix. That's off $4 this morning, down 1%. Let's go see what that is running into. Looks fairly bullish, although we had a little doji candle out here on Friday. Now you're seeing some leaves fall off of the tree, meaning that we're seeing a little bit of a lower close here today. You'd have to say a normal pullback inside of Netflix would bring it back to the 406.55 to 391-ish area. 406.65 ought to act as support. That is the daily chart. Let me look at the weekly time frame, see what the weekly chart shows from a support level. It shows 385.05 out there, so nothing nutsy here. As it came to the swing point last week, the swing I'm referring to didn't actually get to it, I don't believe. The low is 438.10, volume 8.6 million shares. Let me see. 21430. So, yeah, 8.6 million shares. And last week it did, it's moving into that swing point with volume. So the weekly chart for Netflix says it actually wants to go test those highs. Yeah, it got in there. Okay, it got in there for sure. So Netflix wants to go test the highs out here, which are going to take it up to the 458 range. So, a gift would be it backing down to the 385-ish type range out there. That's what's going on inside of Netflix. Nothing breaking apart there. Let's look at the jazzy one, Jazz Pharmaceuticals. That's trading off about $2 right now. On the weekly chart, it's running into support out there at the price of $143. Looks like $143.65. Is that it? $144.79. And it's trading at $144.85 right now. But let's look at a weekly chart. Daily chart. See if the daily chart reveals any more information to us. That is JAZZ, Jazz Pharmaceuticals out here. So it's got resistance on its daily chart. Brand new market profile that began here this morning at 146.56. Inter-session high has been 146.91. That's acted as resistance. Getting above that would be very bullish. Not being able to break through that says it pulls back to about the 140.84 type area. That is on JAZZ out here. Let's take a look at some currency pairs. Let's switch over. Let's take a look at the currency market. Let's go see what's going on out here. Let's go take a look at one of our favorite currency pairs. That is the Euro Japanese yen. Let's go see what it is doing. It's in the process of trying to form an A to B equals CD to the upside, at least at this stage. However, to do it, it needs to close above 139.97. It has failed in an attempt to do that. This chart here still looks bullish to me. Bullish from a number of different standpoints. Number one, nice Gartley buy, 0.786 Gartley buy pattern. So we've got that. We've got a bullish moving average cross out here. We had a 0.618 retracement from the inter-session high that took place after Mario Draghi's comments were interpreted by the market. That was on June 5th out there. We saw some wild swings inside the currency market. That includes the Euro Japanese yen out here. It looks to me like at this stage it wants to complete an A to B equals CD to the upside. Let's go take a look at the U.S. dollar Japanese yen. We haven't looked at that currency pair, that cross pair in a while. And if we do take a look at it, what we're going to see is we're going to see a descending price channel. I haven't drawn the bottom of the price channel in, but I got the top of the price channel in there. That's where we're using the co-locate. It doesn't matter whether it's an open or a close. We're using the body of the candle. We're not using trends. We're using a price channel. Trends, you would use the extreme emotions of a candle. That would be your wick, upper or lower, depending on which trend it is you are drawing. In this case here, we've got a channel line. That's the red diagonal line going across my screen. U.S. dollar, Japanese yen, if it can break above that trend, that would be very bullish out here. Thus far, what is it communicating to us? Not a lot, because we've seen really a consolidation ever since about the time frame of January 24th. So kind of a longer-term consolidation. Of course, consolidations do resolve themselves in the direction that they came from. More times than not, that would say that the U.S. dollar, Japanese yen might, in fact, want lower price out there. We'll see if that comes to fruition. We know where it needs to break through in order for it to get higher price. Lower price, it needs to break through the consolidation lows right around the area of 100.74. That is your U.S. dollar, Japanese yen. Dow's up 23, S&P up 3, and we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Let's go out to Littleton, Colorado, to our man, Bill. Bill, thanks for calling. Thanks for holding. How you doing today?
I'm doing really good today. How about you?
I'm doing well. Thanks so much for asking. Summertime kicked in out there. You got some nice weather?
Oh, yeah. We've had some rain the last few days, a little bit of hail. Of course, Colorado's the hail capital of the world, so we expect that. But
is it really? I didn't know that.
Yeah, that's what I always read anyway. So.
Okay. Well, yep. You have the hail capital covered. We've got the lightning capital, I think, covered over here. So we got the bookends out there, and then in the center they got the tornadoes, right? Hurricane or Tornado Alley.
Those mostly happen to the east of us.
Yeah. So, you wanted to take a look at
Hero.
Hero, H-E-R-O, Hercules Offshore. Tell me what you're doing, how I can assist you.
Okay, I'm in this here, and this is a long-term hold. And I've been looking at the weekly chart here, and this has had a pretty good accumulation, looks like, to me, since about February. We've had higher volume on the weekly chart than we did coming down. And I really like this for a long-term hold in here.
And have you been in it for a while, and you're looking to add to a position, or you just gotten in?
I've been in a couple of weeks now.
Okay.
And if it ever breaks through $5, then I'll probably add.
Okay. Yeah, I like the number $5 that you threw out there. If we take a look at its market profile figures, 498 happens to be the area on a weekly chart where it would say it's good to be long out here. So that's however you came up with $5, you're getting some confirmation on a weekly chart. You did mention a weekly chart, and it does look like there's quite a bit of accumulation or sideways activity inside the equity. That's really been going on ever since the February 2014 time frame out here. So that's what the weekly chart. Let me see if there's any signs of strength for you on the daily chart here yet. Sign of strength is something that you like to see, Bill, when something comes off of the bottom. Now, in this case here, you're in it. I'm not saying to get out. You on a daily chart says don't let it get below 434. Let me see what the weekly chart said for you too. Let me go back there. The weekly chart said you don't want to see it get below 429. So I'd use that and I mean on a closing basis. So you don't want to see this really get below 429. That would tell you that there's probably some selling pressure and that would be building up on this. The daily chart here, I'm looking just for a sign of strength. First candle session with volume that I went to, the one that sticks out is April 23rd. That was selling, so that's not a sign of strength. There was a little bit of a sign of strength out here that took place on May 21st when it moved higher with accelerated volume, 10 million shares on that trading session. So it does have a sign of strength out there. And then maybe a second one, not wide price spread or anything, on May 29th. So the resistance is 469 on the daily chart. You'd really like to see it now get above that area because this has the resistance areas, these red horizontal lines going across my screen. And really since April 8th, it has not been able to break above that resistance level. So it closed above 469 on the daily. It closed above $5 on the weekly. And you will have a nice bullish-oriented message for you. But please make sure that you're using stops, even though it's a long-term trade. There's other places where you could come in if these areas here fail.
Right. Yeah, I agree. With that there. So
because the problem is,
my main thing is eventually, I figure about 3 to 6 months, this will probably break through that $5. Is what my estimate is.
Have you traded this before? Has it been part of your portfolio in the past, or?
I traded it a few years ago, but I just got back into it here, like I say, a few weeks ago.
Yeah, I will tell you, there's something wrong with this equity here. It hasn't broken the highs of September 2009. So just be careful out there. Don't get married to it. And, hey, Bill, thanks so much for calling. Thanks so much for listening. Folks, our man Basil Chapman will be up next. Let's go ride some waves out here. Got the Dow up 21, S&P's up 3. Have a great Monday, folks. Look forward to seeing you soon.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.